When you're thinking of the halving, are you expecting everyone's going to be a flurry of anticipation to have more, to own more as the supply becomes more limited and it does drive up the price?
Well, I think the halving is a great opportunity for people to learn more about what Bitcoin is and how it works. You know, I mean, Bitcoin, it's designed to mimic precious metals in that the more you mine it, the more difficult it becomes to mine. And going into this halving is we have an unprecedented setup because we have hit an all-time high on a weekly, monthly, and quarterly basis. Prior to the halving, which is something that hasn't happened before. In the times that's happened previously, after you have, this weekly, monthly, quarterly all-time high, you've had an appreciation of 300%.
Right.
So, the setup of the halving is interesting because it's a financial endeavor for the miners, and you can learn a lot from watching what the miners are doing going into the halving. And they've been investing, so they've obviously been betting their businesses on the price of Bitcoin going up, and it looks like they're about to win their bet.
I like the comparison with literal mining of metals or commodities, call it what you will. And I find those data points interesting. When you say machines, I think you mean the compute, right, to run this. And you're also focused on the hash rate, which has been accelerating. Why are those data points that you're following?
Well, because what you're doing, and if you're looking to the miners to see what they think is going to happen after the halving, then what you're doing is you're saying, okay, well, what's the break-even point for them? So at the current, at the current rate of Bitcoins being created, which is about 900 per day, the break-even point for them is a $32,000 Bitcoin. So they've been investing all year long, even knowing that after the halving, the break-even point for them will be $64,000 Bitcoin. So even back in January, when the price of Bitcoin was between $40,000 and $50,000, they were still investing, betting that the price of Bitcoin would surpass that $64,000 mark. So now Bitcoin's hovering around $70,000. And then what you have is, again, as I said, you have about 900 Bitcoins being created on a daily basis. After the halving, that will go down to 450 Bitcoins being created on a daily basis. But you have this new event, which is the Bitcoin ETFs, which are driving a demand of around 2,500 Bitcoins every day. So, there will only ever be 21 million Bitcoin. 19.5 million of those are already in existence. All of those have come into existence via this mining process. And if you just look at the supply side, we've had kind of a we've had this demand that's been created by the ETFs, and then now you're about to have the supply shock of the halving. So I think it's very simple supply and demand, and also now Bitcoin's been around for 15 years. So it's been hardened, and we've had a long time to look at it, and we've looked at these cycles many times. So there's no guarantee that the past will predict the future. As I said, we've never had this all-time high in advance of the ETF. In advance of the halving. The ETF is a new way to buy Bitcoin. So there's a lot here that's unprecedented. Yeah. But we're definitely looking at past cycles to try to predict the future.
Ian, we are asking a lot of your own expertise in this domain, and I wondered just how decentralized is the mining community at this moment? How much are they able to be redeploying yet further and further capital into compute, into, well, ultimately the economics that you just walked us through?
Well, it's global. It chases cheap energy. Because the cheaper that you can run the mining operation, the more profitable you can become. Also, the compute that drives mining, has improved tremendously between the last cycle and this cycle. So, it's a global business, but again, these are businesses, right? So, the question is, what will they do after the halving? How much of the Bitcoin that they've mined will they need to sell and then put into the market? Will they be able to keep their machines online because it's profitable to do so, or will they need to unplug some of their machines because the profitability has gone down? So that's why it's super interesting to continue to keep an eye on the mining business and to see what investments they're making and what bets they're making.
We're talking about the halving because it's due in April. Look, we've had a pretty robust debate in the last week, Ian, with Jack Mallers, who was on the program, the Strike CEO. Mike Novogratz came on the show last week and made the same argument. They basically in the camp of there's only 21 million Bitcoin ever, and therefore price only go up, Bitcoin go up. for that very simple reason. But one of the interesting data points that I track at least is liquidity in the market. You know, I get it on the supply side, but there's a lot of trading that goes on basically. Are you in the camp of only 21 million Bitcoin ever, so it only go up?
Well, I'm in the camp of we lead digital lives and we will have digital ownership in our digital lives. And there is a new invention here. I mean, that's, I think this is what people often kind of overlook. They look at only the speculative side, but you know, I've been working on the internet since the early 90s, and I did digital music for 20 years, and I was a big part of the fact that you no longer own your music collection. You rent it. So Bitcoin has been the tip of the spear of digital ownership. And I think that we will have digital ownership in our digital lives, and yes, because you have this truly scarce digital ownership asset, which is it behaves like a precious metal. I think, look, if you own pesos, you want to own dollars, and if you own dollars, you want to own Bitcoin.